Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest videos on my channel, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And for Friday, August 9th, 2024, we have nothing scheduled. But one thing to note is next week, we have CPI and PPI inflation numbers. Pretty jam-packed week next week, so be on the lookout for that. I will keep you guys posted daily. And then what happened today essentially was initial jobless claims came in better than expected. Previously, it was 250,000, and expecting was 240,000, but it came in at 233,000. So essentially, the economy is improving in essence. And we had the S&P, Dow Jones, and Nasdaq all move up to the higher limits that I did mention. The only thing to take away from yesterday was I was expecting a pullback because the longer-term MACD lines are showing downside. Now, in terms of the update, so for example, just to show you what I'm talking about, basically around this level, I said it would hit about 531 and some change, which we did hit 531 and change. Mind you, we closed at 530 and $530.65. This is the SPY, by the way. This is the ETF for the S&P 500, so essentially just a different ratio. It did hit the upper limit, but there was no pullback. And then the question is, what's going to happen? Now, essentially, the S&P, Nasdaq, and Dow Jones are all showing the exact same thing right now based off the MACD lines. And again, MACD lines, they indicate, by the way, in case you're new to the channel, indicate if we're bearish or bullish movement. So for example, like right here, you could see, I believe this is a 6-month chart, and it's showing bullish movement, so technically upside. Now, in terms of the 1-month chart for all of them, they are showing a potential drop. And coincidentally, they're all at their limits. So for example, just a quick recap, not recap, but showing all of them. This is the S&P hitting a limit right now. The Nasdaq, I'm looking at QQQ, which is an ETF for Nasdaq, and it surpassed it, but there's been times that it surpassed the limit a little bit, I believe, right about here, and it still got pulled down. So it's pretty much at the limit, and mind you, it passed the limit in after hours, not in pre-market, right, or during the actual trading hours. So in after hours, it passed the limit. So it's reaching the limit, and 1-month chart is showing downside. S&P 1 month showing downside and is at the limit as well. Dow Jones, same thing from what yesterday I mentioned in terms of the limit. It's at the limit as well, hitting a moving average and about 39,446 points, give or take. And QQQ, by the way, it was at $448.07. Now, the question is it going to get pulled down? To be honest, because the 3-month, 6-month chart for all of them are showing upside, even though the long term is showing downside, it's pretty much like, in essence, a coin flip, because there's nothing really hitting tomorrow unless the market decides to pull back at the end of trading day Friday. Again, this is always just my opinion, so please do own due diligence and research before buying and selling. But essentially, it's essentially like a coin flip, because 1 month MACD line is showing a potential drop. We're at the limits, but at the same time, the 3-month, 6-month chart is showing upside. And then the 1 year and the 5 year, which is more longer term, but longer term in terms of like next few trading days, a week kind of thing, is showing downside. Now, and we have next week CPI and PPI inflation numbers. The only thing is the market is expecting pretty much a full basis point rate cut this year. So they're expecting, I think it was somewhere between 25 to 50 basis points in September, and then a total of 50 to 75 basis points leading up towards the end of the year, in a combined total of 100 basis points, basically, in essence, like a combination but limited to 1 basis point drop for the year. So and the CPI and PPI inflation numbers, I'm not expecting some kind of crazy numbers where it's going to knock the market down. And because of that, not because of my viewpoint, but because the market is expecting the rate cuts, I'm assuming the markets are also expecting good, relatively decent inflation numbers. So if that's the case, I don't know if the markets will necessarily go down on the end of the trading day of Friday for protection for the next week leading up to it. But essentially, like I said in the beginning, it's almost like a coin flip where we're at the limits. We could get knocked down, or we could end up going to higher levels. Now, I'm going to cover the higher levels and the lower levels and essentially show you what levels we'll be leading up to or coming down to if either or scenarios happen. So first, I'm going to look at the SPY, again, ETF for S&P 500, just a different ratio. Close at $530.65 and hit the upper limit. Now, if we do end up going higher first, I'm going to cover the upside, and then I'm going to cover the downside. Essentially, first, we could be getting knocked down by this downward trend resistance line. The only thing is, though, this one is strange because for the Nasdaq, the downward trend resistance line actually held the whole entire time as resistance. but for the S&P, we had a breakout. So, or from what I can remember from the Nasdaq, I'll double check right after this. But we have a downward trend resistance line that could potentially stop us, but coincidentally, it's around the same ballpark of resistance right about here in general sense, which is pretty much about 534 and some change, 535 and some change. And then these resistance levels is about 535 and some change as well too at the same time. Then the next level we're looking at is pretty much at the moving average of about 537 and some change, and essentially getting to this level of about 538 and some change. Can we go higher? Obviously we can. I am not anticipating that much of growth because, again, the longer term MACD lines are showing downside. So because of that, I don't think we're going to go higher than 538 and some change for Friday / tomorrow's trading day. That's the thing. Now, if we go to the downside, essentially we could have a small pop-up to the upside like we saw before, example for right about here, which dates back since May of 2024 and went up to $533 and some change and then got pulled down. But I don't believe it got pulled down. Yeah, see, this was pre-market anyway. So pre-market, we might spike up and then have a down day as well, essentially. But these were flat days before, so debatable. But either way, pre-market was 533, 534, and then just got knocked down. And then if it does come down, the first levels I'm looking to come down to is about 524 and some change. There is some support at the 522, but every time it gets down to the 522, essentially we're looking to come back down to this level about 518 and some change. The 518 and some change, we had some support, 1, 2, 3 support levels. There was a consolidation support right across about here. And then a couple times when we dropped down to 518, we saw a couple of support levels right about here too as well. Now, the uttermost lowest levels, I don't believe it's worth mentioning right now, but essentially we're heading down to 500 to 499. The only thing is, though, I would say these levels might not be seen, the 499, 500 for the time being, because from what I'm seeing, articles and all that stuff, institutional buyers are buying into this sell situation potentially. The only thing that's strange about this whole entire situation of they're buying in is I don't see essentially some of these stocks going up that high. They're essentially staying at the same level. So for example, if you look at Nvidia, it's at $104.97. It's pretty much been hovering around, like, let's say $95 to $108, give or take. I don't see much jumping. It's just constantly big volumes day by day, but just staying in the same zone. And then same thing with Tesla, like it's $198.84. It's still not at the levels, for example, that it was like a week and a half ago, I believe, which was about $220 at least. So yeah, they're potentially buying in. I just don't know if the volumes that they're buying in are massive, but we'll see. But yeah, if they're buying in, institutional investors are basically market makers, and essentially they're expecting more upside. So if that is the case, then we might not see the levels that I mentioned, I believe 2 or 3 videos ago, or probably 2 videos ago, where the longer term MACD lines are showing downside, and we were pretty much around at this level of 518, give or take. And the expectation is to come down to the $500 to $499 dollar price point for the SPY/ETF for S&P 500. And same thing applies for QQQ. Again, like I said, the MACD lines are the exact same, and we're at the same levels, give or take, unless you count basically the after hours, which it actually passed levels. But the one thing to mention is, like I stated, for the institutional buyers and all that stuff, I stated that we would come down to this level again, $413 and some change. Mind you, closed at $448 and some change. I don't think necessarily we'll see this levels, even though the MACD lines long terms are showing downside. If the institutional buyers are truly actually buying in, the volumes don't seem to be massive from what they're buying, because again, these shares price points are not necessarily moving to higher levels that I'm saying. But if they do end up continuously buying and expecting upside, and they're actually correct in expectations for the upside, then this lower level won't be met. But again, longer term MACD lines are showing downside, so we'll see. But the first things first, to the upside, and then I'll cover the downside. This is QQQ, which is an ETF for Nasdaq. And we closed at $448 and some change. So first level, I'm expecting, if we were to go to the upside, getting knocked down by this downward trend resistance line, which I guess, like I stated, for the S&P 500, we did have a breakthrough. I thought the Nasdaq didn't, but the Nasdaq did as well. But for the Nasdaq, it has more touch points. The S&P didn't have that many touch points. And the first level of resistance I would expect is about $452 and some change, essentially $453, because again, my lines are not perfect. And then the 454, I guess, because constant horizontal resistance right there, but then the 455. So essentially $453 to $456, constant zone of resistance, where we're just pretty much going to consolidate potentially because of the moving average and horizontal resistance and a downward trend resistance line. And then if it goes to the upside sporadically, like it's the market's way too optimistic, then we're going to $460 and some change level, which is a horizontal resistance at / support level. Now, if we do go to the downside or have a small pop-up to the upside, small pop-up would probably be about 451.52 or 453, and then get dropped down, potentially maybe have support at the 447. But essentially what we're trying to get down to, if the markets come down and the MAC lines kind of reverse to the downside and go more closer to the long-term MAC lines direction, then we're heading down to the $433 and some change level, give or take. But for the time being, even if we do drop down, we'll see a support, for example, at the 439. I think, in my opinion, for the Nasdaq, and I guess for the S&P, I should cover that too as well, because the MAC lines are showing more to the upside for the 3-month and 6-month chart. It might just come down to only 439 and some change, which is the midway / resistance support level that I saw, and that's $439 as opposed to 433, because again, 3-month, 6-month are showing upside, so technically wouldn't be that much of a dramatic drop for Friday. And then for the S&P, I believe the mid-range was pretty much about 400. It's about $523, $524, $522, give or take, around that price point. Now, horizontally, you can see from the dotted lines, there's about resistance, breakout right there, and then resistance, but then there's a support jump pretty much across the line for the most part. But about $522 to $524. That's for the SPY ETF, and then that's basically it. Again, seeing that $413, I don't think potentially might happen, because in case the institutional buyers are continuously buying and the volume does pick up and they are correct for the upside, because if they are buying in, they're expecting upside, right? Now for the Dow Jones, same thing, hit the limits about 39,400 something points. We closed at 39,446 points. And if the same thing applies to go to the upside, I'm expecting us to get hit by a stoppage of about 40,000, give or take, because horizontally you can see resistance right about here. I'll just quickly draw it. Horizontally at this level, there is resistance, support, resistance, somewhat resistance there. It's showing about 39,800 for this level, but then I'm basing off the 40,000 between these moving averages plus this resistance zone right about here. Not resistance zone, but there was a peak right about here, and that's pretty much about 40,000 some change, I guess. And so this moving average is about 39,963 points, and then we're looking at 40,035 points. So essentially somewhere between 40,000 to 40,100 points, give or take. And I don't think we're going to go higher, in my opinion, because again, the longer term MAC lines. I could be wrong, obviously, but that's what I'm expecting. Now, if we do head down, if we do spike up to that level and then come down, we'll probably pretty much end up heading as support at 39,400 to 39,500 points, give or take. But if we end up heading down for the trading day, I don't think it's going to be a massive drop, but essentially it would be a decent drop because, again, 3-month, 6-month moving MAC lines are showing upside. So essentially we would close down to, not close down, but head down to 38,500 points, give or take, and some change. But that's basically it. Essentially, tomorrow is almost going to be a coin toss, in my opinion, because we'll see. They are at the limits, and MAC lines are showing conflicting direction a little bit, somewhat. But we'll have to wait and see. And again, there's nothing really for tomorrow, so it's kind of hard to judge off of what the market is going to be expecting / will they end up heading lower for anticipation for next week. But the thing is, though, the CPI and PPI inflation numbers are not coming right off the bat on the Monday. It's coming out on the Tuesday and Wednesday, right? So we'll see. But it is jam-packed week next week, by the way. That's it for today's video. If you found it beneficial, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. And I do post these videos daily, so I highly encourage you to follow / subscribe so you'll be notified when I do upload my next video. And that's basically it. Thanks again for watching. Appreciate it. Take care. God bless. Peace.